what's the only explanation that would be logical why the U.S. limit production of the silver eagles, which is against the law, and why would they not close out short positions after they've got the other side covered, or the hedge no longer needs to be there, if not to suppress the price of silver further? And if you have the backing of the U.S. government behind you, you don't care how underwater that short position goes. So
the fascinating aspects surrounding the production of silver eagles are examined by Andy Schectman in a thought-provoking discussion. Silver prices are suppressed by hedges and their intricate web. By providing insights into the potential influence of the U.S. government's backing, Schectman emphasizes the complexity of short positions. For a deeper understanding of these puzzling dynamics, he emphasizes the importance of finding optimism and adopting a broader perspective. Let's watch the video till the end with Andy Schectman.
Well, in terms of based on everything that we're seeing, to me, I find it to be the most distressing thing I've ever witnessed as an adult. The fabric of this country being torn apart, the full faith and credit. Well, credit, we're insolvent, we're a banana republic. At least we don't jail our political rivalries. Or maybe we do. Maybe this isn't the place that...
Good day, and welcome to the Economy Express, your trusted source for cutting-edge financial insights. Today, we take a deep dive into the silver market, uncovering a story that may reshape your investment strategy. Could silver prices be artificially suppressed? Could the U.S. government be behind a larger financial maneuver? Renowned industry expert Andy Schectman, CEO of Miles Franklin, shares a groundbreaking perspective that challenges everything we thought we knew about silver's trajectory.
That everyone wants to come to for justice and equal application of the law. These are the things that are really bothering me. Not even as much for me. I mean, I'll be 53 years old next week. I'm not, 1 foot in the grave, but I life is going fast. I worry about the world my kids are growing up in, and I find it to be very distressing and part of a bigger picture. In terms of what do I think about gold and silver not reacting the way that they should, it's frustrating, but I take solace in seeing the acquisition by the most sophisticated traders on the planet using the suppression of the paper price and the rhetoric that is typically anti-metals, anti-gold, and pro-equities. I use that information to give me continued optimism in the respect that if price were an indication of value, then why are the exchanges being bled dry? Why is the biggest money in the world accumulating gold and silver? Why are the central banks buying more than at any time in history? To me, what gold and silver represent is the antithesis to the system. They have to step on it best they can, but the problem is, in a world where everyone is no longer a fan of the U.S., where they question, is this really the country that we always wanted to be a part of? In other words, the country that people would sail across an ocean on tires tied together with string. Is this the place of freedom and justice and liberty and equal application of law and rule of law and all of these things that seem to be fraying? I think this has a big picture, and I think the rest of the world is no longer as enamored with the United States as they once were. And that's why you're seeing such a concerted effort, I think, to suppress gold and silver, because it really is. If gold and silver go higher, it signals that the dollar and the Western system is in very big trouble. So you want to make it appear as though everything's okay, step on gold and silver. But what's interesting is that as they step on it, the rest of the world is sitting there with open hands saying, oh, well, we'll take delivery then at that stepped on, suppressed, make-believe price. This will end at some point. And it will end in a form, I use the term a lot, logarithmic decay, which is, it's like going down the river towards Niagara Falls. And even though you don't know the falls are coming, you start to move a little faster, more downhill, and bang, all at once. Where are we on that graph? That's the part I don't know. How close are we to the falls, whether it be with the dollar, whether it be socially or politically, and what are the ramifications in the end? Bix, when you see the biggest money in the world, using with great sophistication the rigged markets to position in gold and silver without anyone noticing, to me, that gives me optimism. And I hope other people share in that optimism, because if you just follow the price, it's counterintuitive price. It's frustrating as hell. I get it. So we will have our day. That I'm sure of. Just don't know when. They wouldn't close. To leave those hedges open, it could be disastrous. You put a metals company like mine out of business if the market moves against you. But if you want to maintain an illusion that silver is not so important, I've told, I don't know how many millions of people in all the interviews I've done, that your 3-part interview with the guy that developed the Silver Eagles, Jack something, was groundbreaking. And I tell everyone they need to listen to it to gain some insight. But when you realize that we have no strategic stockpile of silver, that it is needed copiously, not just in industrial and monetary applications, but also in military applications, the need for it should be not a industrial metal, but a strategic metal. Maybe the U.S. government is stockpiling silver. I know you think about that a lot. It makes me believe they are. It makes me believe totally that price is a tool of misdirection. So if you understand that price is a tool of misdirection, and don't focus on the annoying shorting of it, the counterintuitive nature of it, but why? Why are they doing it? And then you throw into it the fact that last year they made like 14 million Silver Eagles. This year, even with the doubling of production, they'll be likely to make 14 million Silver Eagles, which would be about 25% of what they have the capacity of doing. Where's the rest of it going? And and the video you did with the CEO of Sunshine Mining, everyone thought it was a shortage of blanks. He proved it wasn't. Why? What's going on? And I think those are the things that you need to take away from this. Yes, it's frustrating, but there is a bigger plan for gold and silver. And those people that are able to hang on and see the fundamentals for what they are, rather than the price that is used to misdirect. I mean, look at even the most sophisticated money managers in the world get constantly fleeced.
If you're an investor in precious metals, this is a discussion you can't afford to miss. Let's start with a critical question. Why is the U.S. Mint deliberately limiting the production of Silver Eagles, despite its legal obligation to meet demand? Schectman argues that this is no accident. Instead, it appears to be part of a larger strategy designed to suppress silver prices.
By price, they're ignoring fundamentals, and they get fleeced by the commercial banks every single time. And you're right, they are net long right now, and not as net long as they've been the past 3 times when the price really jumped up. So maybe there's a little bit more weakness ahead. I don't know. I do expect to see the price rise based upon the positioning of the commercials opposite the money managers who are now short. But yeah, I guess to me, it's a bigger picture. The U.S. Mint wouldn't do this to make profit. The U.S. Mint would do it because they were told to do it for a bigger reason. And I think that is where you take optimism from, and try and find it and see what's the term, Occam's razor. What's the only explanation that would be logical why the U.S. Mint would limit production of the Silver Eagles, which is against the law? And why would they not close out short positions after they've got the other side covered, or the hedge no longer needs to be there, if not to suppress the price of silver further? And if you have the backing of the U.S. government behind you, you don't care how underwater that short position goes. So these are the things that I take away from what is annoying and counterintuitive to finding optimism in it. And I think that's what you have to do if you want to try and see the big picture. 7-1. And Keith Neumeyer is a friend of mine. I saw him just a few weeks ago. He's told me numerous times privately. He said it publicly just a few weeks ago at Rick Rule's conference. It's a 7-1 geologic ratio, and that's because silver is found in the Earth's core, or the Earth's crust, rather, as in a form called epithermal, which is very, very near the top of the surface. So big deposits were found decades ago. And that's why of the nearly 1 billion ounces mined last year, roughly only 350 million came from companies like Keith's, who are on the search for silver. The majority of the silver comes as a byproduct of mining other metals. So it is a depleting asset that for 5,000 years came out of the ground at 16-1, hence the 16-1 price. Even when Sir Isaac Newton was trying to figure out the relationship between gold and silver for the currency at the mint, however many hundreds of years ago, he used a 16-to-1 ratio. That's been predominant forever until now. You have a 7-to-1. And if you realize that the average price ratio of the past 100 plus years has been roughly 42-to-1, that's still 6 times higher than what it's coming out of the ground at, which would represent a double from where we are today, from 85-to-1. So this has happened. When I first noticed 85-to-1, Bix, was 2010, and I looked at it. I wouldn't doubt if I didn't talk with you about it. We might have even done a video, and it was the second or third time in human history it had been that high. And I begged everyone to trade their gold to silver. Within 7 months, 8 months, by mid-2011, you had $50 silver and 1915 gold. That's 37-to-1, just below its 100-plus year average. So I think that this is an anomaly in every respect of the word. Anytime you are 80-to-1 or better, you need to be in silver. And this, or even 70-to-1 or better. But this represents an anomaly in every respect in terms of its geologic relationship to gold, its price relationship to gold, its mining ratio to gold. In every way you look at it, historically and currently, this is an anomaly. And when I look at what has made me successful, there have been a half a dozen trades or more that I would consider to be career making, and every one of them centered around just that: identification and exploitation of price anomalies. This is 4 feet of snow in Delray Beach, Florida in July. And if that were to happen, I wouldn't call my sister back in Minneapolis and say, hey, can you ship me down my 2 snowmobiles that are in your garage? And because I would know it's an anomaly. It's the same thing right now, but even these distorted anomalies can last longer than.
Welcome to Economy Express, your go-to destination for all things economics and finance. Whether you're an experienced investor, an inquisitive student, or just someone who wants to stay ahead in today's ever-changing.
He suggests that government-backed short positions allow financial elites to manipulate silver's value, keeping it artificially low while institutions quietly stockpile vast reserves. The real question is, why? According to Schectman, silver's true demand is being masked by the illusion of oversupply, carefully orchestrated to prevent panic in the financial system. If silver and gold prices were to skyrocket, it would signal severe instability in the US dollar and the broader Western economic model. The suppression of silver, therefore, is not just a market issue, it's a geopolitical and economic strategy. Silver isn't just an asset, it's a strategic resource. Its applications extend beyond investment portfolios into military, industrial, and technological sectors. Despite its essential role, the United States shockingly holds no strategic stockpile of silver. This begs another crucial question. Could the government be stockpiling silver in secret? Schectman believes so, arguing that price manipulation serves as a tool of misdirection, discouraging retail investors from recognizing silver's true value. He also highlights a critical supply issue. Silver is increasingly difficult to mine. Unlike gold, which can be extracted at deeper levels, silver is found closer to the Earth's crust in what's known as epithermal deposits. Most of the large silver reserves have already been discovered and extracted, leading to an ongoing supply deficit. This, combined with the growing demand from central banks, industries, and private investors, suggests that silver's true value is far higher than its current manipulated price. One of the most compelling arguments Schectman presents is the global shift away from US dollar dominance. Across the world, central banks are purchasing gold and silver at record levels, signaling a fundamental shift in economic power. Countries that were once staunch supporters of the U.S. financial system are now diversifying their reserves, preparing for a future where the dollar is no longer the world's primary reserve currency. If gold and silver prices were allowed to reflect true demand, it would expose the fragility of the Western financial system. The suppression of precious metals, therefore, serves a dual purpose: maintaining confidence in the dollar while allowing elite institutions to accumulate metals at deeply discounted prices. But, as history has shown, markets eventually correct, and when they do, those who recognize the signs early stand to benefit the most. Let's talk numbers. Silver has historically been mined at a 16-to-1 ratio to gold. However, new geological data reveals that the actual mining ratio has dropped to 7-1. Yet, the current price ratio remains at an astonishing 85-1. What does this mean for investors? Schectman argues that such a severe price anomaly represents an unparalleled buying opportunity. He references a similar event in 2011 when silver was priced at an 85-1 ratio to gold. Within months, silver surged to $50 per ounce, drastically closing the price gap. He urges investors to recognize these patterns and act accordingly, emphasizing that this kind of discrepancy does not last forever. In his words, this is like seeing 4 feet of snow in Florida in July. It's an anomaly so extreme that logic dictates it must correct. And when it does, those who position themselves correctly could see substantial gains. So, what should investors do? According to Schectman, the key is to look beyond price manipulation and focus on fundamentals. He acknowledges that the short-term volatility in silver can be frustrating, but he emphasizes that the biggest financial entities in the world are using these suppressed prices to quietly accumulate massive reserves. Even the most seasoned investors can be misled by price action, but those who understand the deeper market dynamics recognize silver's suppressed value. Schectman suggests that investors take a strategic long-term approach, viewing silver as an asset that will eventually reflect its true worth. To summarize, Andy Schectman presents a compelling case that silver is being intentionally suppressed to maintain financial stability and allow elite institutions to accumulate it at artificially low prices. However, the fundamentals, rising global demand, dwindling supply, and a shift away from the US dollar suggest that silver's long-term potential remains exceptionally strong. If history repeats itself, silver may be poised for a breakout that catches many off guard. The only question is, will you be positioned to take advantage of it? That's all for today on the Economy Express. Stay informed, stay ahead, and keep a close eye on the silver market. Don't forget to subscribe and join the conversation below. Until next time, this is the Economy Express, your trusted source for economic insights.